All right, good morning, good morning. Welcome to another episode of the Money Marketplace with me, Jimmy Bogo, right here on Hot 96. Today we want to have a look at how money market funds operate, how can you get in, and what will it require for you to invest in a money market fund, and also just looking at the risks, looking at the benefits that you get as a new investor. And this morning I'm joined in studio by Muthoni Muuo, who is a CIC portfolio manager, and Purity from Abojani, just looking at an analyst rather from Abojani, just looking at how the market is and how it has been performing over the last few years. We've seen a lot of interest in that space. And I just want to start with you, Muthoni. First of all, when I'm looking at a money market fund, what are the basic lessons that I need to remember?
All right. So thank you for inviting us here. It's a great opportunity. So when you're coming to money market funds, the first thing you want to look at, because there's an array of providers, is who is this person? What is the size of the total fund that they have in assets under management? What is their branding? What's their customer service like? And before that, you need to have known what your objectives are. So know yourself, what your objectives for your financial ideas, and then now decide where you want to invest in.
All right, and Purity, just looking at some of these funds that are currently operating within the Kenyan space. Of course, we have the likes of CIC, we have some that are backed by financial institutions, the like of NCBA, and I just want you to help me understand. So for a retail investor who is looking for a money market fund to invest in, why is it important for you to look at some of the fund objectives before investing?
Oh, great question, and thank you for having us here, Jimmy. So when it comes to money market funds, and what we usually tell our community as Abojani is that, first of all, you need to understand that investment. We say that if you cannot explain that investment to a child, then you have no business investing in that investment opportunity. So when it comes to money market funds and choosing the right money market fund, of course, you have to start with the basics. Start with, is that fund regulated? Here in Kenya, these funds are regulated by the Capital Markets Authority, and we have around 29 funds. So, of course, you have to ensure first that it is regulated. And then it's important to now check at the total assets that that company is managing. Of course, if a company has a huge amount of risk basically controlling the market, then that company has a lot to lose. And, of course, that company promises you security for your investment. And ideally, that's where you would start, or you would want to put your investment in.
All right, and again, Muthoni, there's the question of how much money do I need to put in an MF?
Okay, so for us at CIC Asset Management, we have a minimum amount of 5,000 Kenyan shillings. So a very, in terms of affordability, is quite there. It's not a huge amount. You can save up and you start with 5,000 Kenyan shillings. And for our dollar MMF, the minimum is $1,000. And for top-ups, it's $100 for the dollars. The dollar fund, and for shillings, it's only 1,000 shillings.
All right, so you've, Purity, again, you have these amounts of money that you're putting in, but of course, the question that I'm sure our listeners would want to know is, why should I put my money in that MMF account and not in a bank savings and just wait for my interest to accrue?
Interesting question. You know, when you're talking to people about their personal finances, the first thing that comes to their mind is my money safe? And so traditionally, people are used to having their money in the bank account. But then the money market fund, you know, in the hierarchy of risk, in all the investment options that are available and where you can put your money, the money market fund has the lowest risk. If you compare it to short-term investments like putting your money in the bank, or longer-term investments like buying stocks or, you know, bonds and all that, money market funds have the lowest risk. And the good thing with them is that they will give you higher returns compared to these other vehicles or investment classes. What we say is that when you want to invest in a money market fund, your main goal here is to have, it's like a safe haven, or where you can put your money in the short term, because one thing that stands out when it comes to money market fund is their high liquidity. Yeah. There are funds where you can invest your money, I think it's between 24 to 48 hours, so you can even withdraw your money instantly. So what's the most attractive about money market fund is that you can use that as an emergency fund or a safe haven for your money. If you want to go on a vacation in December, join a money market fund in January. If you want to plan for your children's school fees, join a money market fund. And we usually say that even your children should have a money market fund, because these are funds that you just you make an investment for their future. it's called financial planning, and it unlocks a lot of value for you as the investor.
All right, and of course, Muthoni, another question that I'm sure a lot of our listeners would want to know is how much control do I have over what the fund does with the money that I've put in?
Okay, very great question. Thank you for that, Jimmy. So for us, we're the professionals. We are the ones who know what is happening in the market, and we adjust the portfolios that we've invested in based on what's happening in the market, and of course, based on the objectives of the fund. So for the money market fund, we invest in securities that are short-term in nature. Of course, we will have some that are medium and longer term, but the bulk of it is in short-term. So that as and when you need your money, like Purity said, we're able to provide that liquidity to you. And at CIC Asset Management, within 2 to 4 working days, we're able to provide the liquidity. So if you have an emergency, we're able to provide for it. And of course, if it's a true emergency, let us know, and we'll be able to even provide the cash to you within 24 hours. So in terms of control, we are the ones in control because we are the ones who are in the market, and we're the ones who know when and where to invest. So we invest in securities that provide capital preservation.
All right, Purity, again, when it comes to the redemption, and of course, you've talked about having access to this money once you require it. But the question is, why should I let the money stay there? What is the benefit of keeping that money there over a long period of time?
Great questions. Most Kenyans or most people, mostly let's talk about the retail investors. Retail investors want a fund that they can have a minimum entry requirement, And people have this facade in their minds that I can make my investment today and then be a millionaire tomorrow. And that's not reality, Yeah. So it's important that when you're making this investment that you have a long-term approach. At Abojani Investment, we tell people that sticky fingers will not last you in the industry for long, because you want to make an investment. You want to see your returns, You don't want to just put your money today and then exit tomorrow. You want to put your money there for 3 months, a year, 2 years, and certainly talk to your financial advisor and determine, are your goals aligned with that fund? How long will it take you to be in that investment for you to meet that? If you are looking maybe to invest up to $1 million and you start with, say, 5,000, as my colleague here has said. So you have to talk to your financial advisor and ask them, how long will it take me to reach that goal that I have made? If I'm saving for school fees, how long will it take me to reach that goal? If I'm saving it just for an emergency fund, then you have to define what is an emergency to you. You can't just wake up and decide that you're withdrawing your money. So it's important for an investor to actually invest with that long-term approach when it comes to money market funds.
In addition to what she's saying, sorry about that, the benefit of money market funds is the compounding interest. So you put your money, it earns interest every month. So you put in your 5,000, it'll earn interest the first month, and the 5,000 plus the interest will then earn interest on the next month. So there's a lot of compounding interest that is there.
All right, and of course, again, just looking at this from having money in my bank account, there's the question of, do I access credit because of the fund or through the fund, or what are some of the other benefits that I'm likely to accrue over time?
Okay. So definitely there's the investment return you will get. That's the biggest benefit, the security you'll get and the return from investing in money market funds. And then at CIC Asset Management, we are able to liaise with your credit provider. So whether it's your bank, your SACCO, you tell them I have X amount of money, say I have 2 million in my money market fund at CIC, can I take a loan of X amount? And then we then put the funds under lien. So it is locked until the tenor of your debt is completed. So you'll be earning interest in your money market fund, and you're able to access credit from whichever provider you have, and you're still able to achieve the goals you wanted with the credit you've been able to access.
All right,
so very
Purity,
flexible.
again, there's this question of why should I invest in a money market fund for an average return of between 9 and 11%, as opposed to, let's say, investing in equities or investing in government paper?
Question. So let's start with the basics. Let's say, when it comes to investment, you have several options. You have the money market funds that you can start with. There's a SACCO that you can join. You can do equities. You can do bonds. There's all that. But why will you start on a money market fund? The reason is very simple. You cannot take on more risk without creating a buffer for your investment. Equities, if you compare money market fund with other short-term investments, like, say, a bank deposit, for instance, a money market fund will give you higher returns than you keeping your money in the bank. When you compare a money market fund with other investment classes like equities, like you buy shares and stuff, or you buy a bond, money market funds, again, have lower risk. Equities will give you higher returns, but money market funds are safer. Before you make any investment, or even before you start building your wealth basket, you have to make sure you have a buffer. It is that is the lowest hanging fruit when it comes to building your wealth. You have to start from there. You have to start from your money market fund and then build up and then now move to the next level, because now, now you'll have more funds to make other investments. So you cannot move to equities before you have a buffer in your money market fund.
And of course, Muthoni, there's the question of diversification within the portfolio in terms of the investments that you carry out. So from a retailer investor's perspective, why is it important for me to invest money in an MMF that has different and diverse investments?
All right, I think you've partly answered the question, but what diversity does is it reduces the risk. So as a money market fund manager, we will have a diversified portfolio of where we put our money. Yeah. So we'll have some in bank deposits, we'll have something treasury bills, we'll have something treasury bonds, and so we are able to invest, even within the banks, it's in multiple banks and multiple tenors. So we're able to diversify the risk that is there in a money market fund, as opposed to you putting it in one bank account where all the risk sits there. So that's a benefit with money market funds. You're able to diversify the risk, and that's what we do as professionals in this industry. All
right, again, Muthoni and Purity, of course, we cannot ignore the question of, we've seen this risk that is associated with a lot of MMFs and just some of these unregulated funds, and one of them, of course, is the usual that we're not going to mention names, but of course, we have to talk about the risk associated with some of these funds. So, Purity, just take us through some of these risks and how do we mitigate against those risks?
When it comes to money market funds, again, we have said these funds have low risk because, as my colleague here said, these funds are backed mostly by the banks. Yeah. So you find that your money at the end of the day is very safe. I think in the market, the industry average is around 12 right now. So one way to mitigate maybe the interest risk that is available or that presents itself as a money market fund is to use that long-term approach that we are saying. That stay in that fund until you actually get to enjoy the power of the compounding effect or that the compound interest that comes along with it. Yeah. So stay in the investment for a longer term. All right. Do not be quick to exit that fund.
All right. So just before we wrap this conversation up, Muthoni, I just want you to help us understand in terms of just comparing how my money market fund is performing compared to the peers. What are some of the metrics that I need to be looking at?
So the first thing I'd say is the size or the funds under management. So the larger the fund, it means there are more people who trust it. So the size, the funds under management, and then the tenor. How long has this provider been in the market? Yeah. Showing, again, the experience they have. They've been through high interest rates, low interest rates, and through diverse business cycles. So those are two key things I'd be looking at. And of course, return. Is it within the market range that is there? But for sure, you want stability. So the worst thing as a retail investor is to have given your money to an entity, and when you want that money back, it's not available. So you want to put it in a brand that is solid, that when you give your money, whether it is your $500 million or your 5,000 shillings, is when I give it to you, will I get it back plus my interest? And that's, for us, is the most important things at CIC.
All right, ladies, thank you so much. Purity Wanjiru, a research analyst from Abojani, and Muthoni Muuo, a portfolio manager from CIC. And thank you for gracing the marketplace this morning. And of course, we look forward to having more conversations like this. But that is how we wrap up this conversation for today. Let's do this again, same time, same place next week.
Thank you.
Thank you.